There you go.
Good
Um,
morning, Alex. 8:20, Friday, February 5th. How are you doing, my friend?
Doing well.
Yeah?
Doing well. Yeah.
You survived
Got
this
my
week?
got, got my coffee. Survived the week.
Brilliant. Brilliant.
How are you?
Yeah, doing just fine. It's been a wild ride, certainly for everybody in the markets and for you and I as well, launching Go No Go charts and sort of iterating on the fly as we figure out how to be business owners and customer service specialists and accounting wonks. It's it's an exciting time. For today's episode, I think we're going to walk through what went out to subscribers on Monday morning in Flight Path, talk through what's happened with the market this week, and maybe give a little preview to what we're seeing taking shape for the week ahead. How's that sound?
Sounds absolutely perfect. Yep.
Awesome, awesome. So first things first. A couple weeks ago, we had 2 down days, lost a couple of percent on the S&P. Is that a sell-off? Is that a change in trend? Is that the beginning of the end? Or are you seeing structurally some better trends, longer lasting, just on the equities front?
Sure. Well, it's interesting. We had this chart in the flight path
Hmm.
at the beginning of the week, and we were showing the testing of the lower bound of this upward trend channel. And
Hmm.
what's interesting is that it crashed through it, and the go no go trend went amber, but we didn't change trend to any of the bearish colors. And then the very next day, we popped right back into that channel. And obviously, we've had a good end to the week. So that was interesting because at the beginning of the week, that was a question. I think a lot of
Hmm.
people were asking, is this more than just a correction in the current trend?
Hmm.
But it looks like we've popped right back in, and the oscillator as well. We see how it flirted with the zero line, but has
Hmm.
come right back up into positive territory. And we've even got a trend continuation green icon, a low risk entry into the current trend
Hmm.
uh, at the end of the week as of yesterday. So a little hairy, but
Yeah.
we've ended the week right back into the trend. It looks like.
I think that's for every market participant, right? This is a game of regret. Either you you watch something that soars to the moon and you regret not buying more, or you watch something fade in your face and you regret ever buying it in the first place. The market has a way of causing a lot of pain for the most number of participants by acting uncharacteristic, right? We never know what the market is going to do next. We can only look for high probability entrances and exits and try to stick with the trend. So looking at this chart of the S&P, that broke the trend channel, that breaks our rules. It switched out of a go trend. Now amber, right? So the overall trend conditions never deteriorated to signal a no go. But for a very risk averse investor, maybe somebody late stage in life who's really just trying to protect their retirement capital, they might get out right at the first amber bar. But then you
Or
look
even,
at
or even the break of the zero line. There's a couple of reasons where you would have been concerned for sure.
absolutely, yeah, having multiple confirmations of that divergence of that breakdown. And I think, for me, the lesson of, you get out quick, you love your losers, you're looking for those, if it breaks your rule, you're out as quickly as possible. If you jumped out before that amber bar, right at the break of the zero line, you could buy back in on the go signal lower,
Yeah,
and
yeah,
you would have had
yeah.
great returns for
And
this week.
and don't forget with these charts, you can still do traditional momentum divergence. So
Mhm.
you had a lot going on over the last couple of weeks that would have, for as you said, for somebody who's particularly risk averse, they may have been thinking about getting out in here, and
Mhm.
yes, could have got back in on the go, or could even be, from a really conservative standpoint, thinking about getting back in on this new reentry.
Yep. Yep. So it looks like the S&P spoofed everybody, jumped out of trend or trend channel, gave us lots of deterioration, lots of divergences, and now we're right back to where we were. Right? We're back in the channel.
Yeah,
We're back to trend. Got a low risk reentry. It's a good point to see trend continuation and maybe add to positions. That's a happy story going into month 2 of year 1 post coronavirus. I think they should
Feels
probably
like month,
change, right?
feels
They
like
should
month
change.
14 already.
That's right. You made it through
Yeah,
January during the lockdown. That added years to your life.
yeah. I feel like you should get something in the mail. You should get some sort of gift.
Yeah. Forget
Well
stimulus
done.
checks. We need warm cookies and some, hot soup.
And some stimulus. Yeah, there you
Yeah,
go.
exactly. Grandma Joe Biden needs to send out some love. All right. So we
Yeah,
beyond equities, Alex, let's take a look at a couple other things that were happening, right? Everybody was super excited about these short squeezes, and all I could
yeah,
hear about was silver. What happened with silver this week, right? Didn't
yeah, yeah, yeah.
right? Everybody was piling in, and it turns out that hedgers hold some short positions to silver to hedge against their positions in the mining and minerals industry. Now, is that the same as activist hedge funds shorting GameStop? Probably not.
Well, yeah, most likely not. It's a much longer story, much bigger story. In the flight path, we looked at multiple time frames on silver. We went back and looked at even the monthly chart. So if we start there, just to keep things in perspective, on
Mhm.
the monthly chart, then we're seeing this new trend, newish. That's several months now, but the break
Yeah,
and a
new
consolidation.
from June 2020. The
That's
new
right.
trend of June 2020, not the new trend of last week.
Yeah, this is, remember, a monthly chart. So
Mhm.
so we've had that break, a consolidation through most of the end of last year, really. Uh,
Mhm.
Tried to make a higher high here, and then obviously this month has pulled back. But if you keep that in mind, then the overall picture from a long-term perspective is what it is. And then we
Yep.
drill down into it to the weekly. That trend line is still on there from the monthly chart, but on the weekly we're seeing the same kind of thing, and we're actually seeing some re-entry activity, some trend continuation happening on the weekly chart for silver, and that of course
Yep.
comes from the interaction of the oscillator with the zero line when in trend. So when in a go trend, the fact that the oscillator's generally been able to stay above the zero line or at
Mhm.
and above zero, and then most recently being able to bounce into positive territory, we're seeing these continuation icons, these re-entries on a
Mhm.
medium term, or some would call weekly a long term. The way people trade now, weekly is weeklies for grandma or grandpa Joe Biden. Everybody else
Yeah,
seems to
enjoy
be
your
one
weekly
minute
charts,
chart.
Grandpa.
Yeah, nobody looks at those anymore.
Right.
And then if we went further down into the daily, then we could see
Well,
this
let's
current
let's
price
just
activity.
let's stop and be professors here for a second, right? For
Yeah,
all you kids in the classroom, the saying is, when in doubt, zoom out. And I can't stand this. You turn on any financial news network, we got a 1% drop, or Dow Jones lost 60 points today. Well, yeah, in the 1970s when it was, trading at 300, that would have been a very significant move. But 60
yeah,
points on, it does not the headlines do not reflect reality. So if you zoom out to a monthly chart on silver, you see that this upward trend starting in June of 2020, right? That's a big move up. Nobody was talking about that silver move then, right? Now you've got Ja Rule and the porn stars talking about their positions in equities and the next short squeeze. This is the mania that happens generally in a bull market. So buckle up. It's fun, right? But I wouldn't give a whole lot of creed to what you're hearing on any news source. Just look at the charts, follow price.
yeah. I mean, even if you look at, I was recording a video for Wiley a couple of days ago, and
Hmm.
talking about the importance of the log chart.
Yeah,
If you're looking at something like, I mean, this applies to anything. If you look at, I've got to take my log off because, you know,
yeah, you're permanently looking at log charts, right?
yeah, I always have the log on. But if you look at something like this, then people are only interested in the fact that plug has gone crazy over the
Hmm.
last couple of months. But if you make this a log chart, you can see that actually it's a really nice looking trend. You
Yeah.
know, that looks like a textbook trend. We've got the rallies, consolidations, rallies, consolidations. You turn the log off, and it
Hmm.
looks as if nothing at all was happening at the beginning of the chart. So yeah, couldn't
Right.
agree with you more there on that, Tyler. We've got to remember to sort of think about the big picture and what's going on, and not get
Yeah.
so caught up in what's happening for
I
that
just
day. What's
for
being. Go
Yeah,
ahead.
for the benefit of our users and viewers on this show, the logarithmic chart is tracking percentage moves in the share price, not price itself. So an arithmetic chart is showing you the same distance on the chart between 5, 10, 15, $20. A logarithmic chart is tracking percentage moves, which really makes sense when you are dealing with a stock that has moved significantly in price. Take a look at Bitcoin, right?
Yep.
The chart just looks parabolic if you're looking at an arithmetic really over any time frame. So there's your lesson in how to toggle your charts. Go for the log.
Yep. And just to follow on from that, this is the Bitcoin activity over here that looks completely irrelevant, but
Hmm.
put the log chart on and you can see that it was a really strong trend. But just to comment on that, the textbooks will say any price move on a chart greater than 20% really should be a log chart.
Yeah.
And of course, then any long term, so massive price moves and long term charts. You'd be better off looking at those on a log chart. And the great thing about, for me anyway, like you said, I'm always got the log chart on, is that it doesn't really affect a short term chart or a chart where there's not a lot of price moves.
Hmm.
So I just leave it on log.
Hmm.
But yeah, what you'll see, like Tyler said, is that on the y-axis up here, the difference between 10 and 20 is the same as between 5 and 10. So you can really see which moves were relatively similar.
Yeah.
Um,
Well said.
but yeah, so this is looking at SLV, but that's the deal with silver. It is interesting, really, in the short term, that now we're riding the zero line again.
Hmm.
Um, so given that, from the larger pictures are saying we're in the go trends, this
Hmm.
would be a nice thing to see if the oscillator can rally off zero and stay in the trend on the short term daily chart as well.
Brilliant. Brilliant. I've heard a number of different analysts talking about overall commodities breaking out of these relative trends. When our subscribers get launch conditions over the weekend, they're reviewing across global asset classes and looking at global indices around the world. Why don't we take a look at the USCI, just the commodity index in general, how that's been performing over time? Because I don't want to downplay the silver trade just because there's been some mania this last week. You don't want to be the Hunt brothers, but you do want to hunt for those long-term trends. And it does seem like commodities have been shaping up to have a really good year. They're
Absolutely.
trending higher.
I think it goes back to what you were saying too about, don't get caught up in the news. I mean, that's a discussion for another day. There is an argument for trading the news, as if there's enough people talking about the
Hmm.
same thing. You
Hmm.
definitely want to be checking out those charts. But yeah, and how long ago was it when everybody was talking about the crazy fact that oil was rallying? So there are other stories
Hmm.
out there, not just the silver trade for sure. And this is like you saying, here's the commodities index, and there's the outperformance in commodities in general, um,
Brilliant.
since sort of the fall of last year.
Hmm. And that's the point of multiple time frames, of looking at the longer term. I mean, this is still just a daily chart, but
Yeah.
understand the context of what you're trading in, right? If you are in a sharp downtrend, but seeing a rally intraday, you want to be
Yes.
selling those rallies, right? You want to be participating in the direction of the trend. We're in a strong uptrend, buy some dips. That's probability. That's probabilistic trading. That
Yeah.
you see an object in motion, it tends to stay in motion in the direction that it's going. And we have all these tools to spot the divergences, to see the breakdowns as and even before they start happening. So you've got your risk management discipline, but understand the context of what you're trading in.
And that for the go no go chart, that really boils down to seeing these re-entries within trend. And then this is the daily chart going back to USCI, and we just saw that the weekly chart, a lot of people will arrive at their overall market bias on a larger time frame and then drill down to the shorter time frame to make those decisions. And here's October, the weekly on the commodities index went into a nice strong go trend. And so then if you go into the daily for that chart, then you really could have been, we go back to that point. This is the same area, October, you really could have been looking to now, like you said, buy dips. So you take longs whenever available in the commodities index. So that's what these green icons, these low risk trend entries or trend continuation icons are trying to identify is trend is in place. We're getting a new surge in momentum after a consolidation. So that's when you'd be able to make that kind of strategy work using the charts. And we, don't fight the trend, like you said. The trend is in place until it isn't. And
Right.
we just got a new one here on the commodities index 3 or 4 days ago.
Brilliant. Yep. And yeah, everybody is going to have their own trading discipline. They're going to have the tools or the things that they're looking for, the way that they manage position size, manage their accounts, and they have their objective. And that's going to be different for every human. That's unique to you. If you don't have that plan already figured out, stock market is a very expensive place to find out to develop a plan. But go-no-go charts, right? As we have been talking for the last year. These are tools to help people understand where trends are, and you can use this with any other discipline, right? We're talking to some of these PMs that have a really solid stock picking methodology, fundamental framework. They're doing bottoms up research. They know the sectors they want to be in. And they turn to go-no-go charts to find out their entries and exits. They're making sure that they're trading with the crowd and that it's the right time.
And I think that's what's so exciting too, is that from completely on the other extreme. I was talking to a day trader who's using 1 minute charts last week. So, but like you said, everybody's time horizon will be different. And this gentleman is a successful day trader. He's been doing it for a long time. But he's still finding the trends just in a different time horizon. So of course, if you look at something that has that kind of data, those trends are in place on any time frame. But for you and I, we're the trend.
I don't have the stomach for it. I mean, God bless the folks who can trade on those time frames and can be at their desk looking at the screens all day long. I mean, for me, understanding where to be overweight, certain sector rotation themes, asset class themes, that's about enough.
I'm with you.
I would lose my mind and probably lose my family if I got tied up in the day trade. All right, so we're seeing this big commodities trend. We're seeing real goods outperform. Not to get all macro on you, but threat of inflation and the weaker dollar seems to be a tailwind for those trends. Emerging market equities, we've seen those outperforming, and a lot of this has to do with dollar weakness. So what is go no go telling us about the DXY, the dollar index?
Well, while you were talking about that, I pulled up an asset class map just to highlight those themes. We've got strong equities, no go in treasuries, strong commodities, strong cryptocurrencies, and here's the dollar weakness, right, that we've been talking about. But looky here on the right side of that chart. So an interesting discussion point, and I've seen it all over the financial news outlets this week, is are we seeing dollar strength? And I think that the question is, are we seeing dollar strength in the short term? But when I talk to people that are, colleagues of mine or people that I've known for a long time, it's are we seeing dollar strength in the short term? But keep in mind the back picture of long-term dollar weakness, and so keep it in that context. So so let's have a look at the DXY, and we highlighted that.
I don't think we're recommending to any of our subscribers or viewers that you try to master some sort of global macroeconomic thesis, a yuan-backed store of currency. Maybe that plays out over the next 10 years, right? China has a fantastic growing economy. They've come out of the pandemic well. If you believe the numbers that they're printing, then they are back on the front foot. Europe seems to be really struggling, and the US is perhaps on a path, but those big events taking place in the background, right? That's not why dollar is weakening here. This downtrend is not part of a massive shift in a store of currency, but we are seeing that pop maybe as investors raise cash in their portfolios. Last couple of weeks may have scared a lot of institutional money managers just to back off the volatility. And remember, so many of those institutional funds are passive and they're traded by algos. And if they're getting a risk-off signal, that in and of itself, right, raising cash in the portfolios could cause a pop in the dollar index.
Yeah, absolutely. And I leave the intelligent market commentary to you because I'm the chart guy. But that's what people are talking about. That's what seems to be the case. And what's really cool and interesting is that we've had this chart going out in our newsletters for weeks now. Yes, since we started to see this downtrend channel, and it's been very interesting to see it play out. We highlighted the positive divergence from the oscillator, 4 or 5 weeks ago, but hopefully, noted at the time and reminded people, look, this is a bearish chart, right? This is maybe the first.
Let's not get confused. Those are purple bars all the way down.
There's a no-go. But that it was maybe the first signal of some maybe change in the technical environment. And then, a week later, we then noted, oh, look, now the oscillator's broken above the zero line and found support. It's another indication. Don't forget, we're still a no-go chart. And then finally, we saw those amber colors coming in at the end of last week, which indicated a sort of a lack of direction at this point. And now the go has been identified with a support off the zero line and even to the stronger blue bars. So this really was a great chart to watch over the weeks as it did, technically what it was supposed to do as it rolled out of one short, in this case, daily shorter term trend into another. So it was nice to see how we could highlight that each week. But this is the dollar strength that people are talking about. And it's sort of a question of now, like you said, if you're in an overall downtrend, should we be selling this rally versus buying, going all in on the dollar? And just as a reminder, the dollar's tried before on a daily chart. We were talking about this in the newsletters a while ago, this break of resistance, this rising oscillator divergence, and then this attempt to go, right, to become a go trend. And it was overwhelmed by perhaps the larger factors in place. And so let's see what happens, this time around. I think what's important for the shorter term people is, okay, how far can this go before it gets turned around by the larger trend, if that's what's going to happen? And so I saw, friends of mine talking about potentially 95 for a target. Now, where does that come from? I think that's when you, like you said earlier, you zoom out, right? And so if we're looking at the dollar on a weekly chart, then here's where that 95 is. It's sort of at this this area of supply over here. But I think even before that, we may be approaching near-term resistance with these levels. Levels here.
Sure. So what we're talking about, if people are new to this craft, supply and demand drives all price activity, but oftentimes you will find overwhelming supply, as a downward sloping trend reverses and it's coming back up, it's going to meet overhead supply at a prior price level. That's just because human beings anchor to prices where we purchased it at. For folks who bought it there at 90, 95, they've watched that trade fly in their face. How happy would they be to let go of their entire position when it gets back to making them whole, right? I
Yeah,
just don't want to lose money on this trade. I'm going to hold it until it gets back to where I was. And then they clear out. That's the overhead supply. That's people dumping out of their positions because they got back to their prior target.
yeah,
But what's interesting about support and resistance, that concept of polarity, we talk
yeah,
about this in the newsletters all the time. If it breaks through an area of resistance, gets through that overhead supply, churns through and breaks out higher, then that area that was resistance becomes a line of support. So you
yeah,
can look for price action crossing above an area of resistance as a significant signal that this has strong momentum. This is on a path higher, and then look at that as an area of support. If it were to turn back and come down, maybe retest that level, which is often the case. So this is basic technical analysis,
right.
all driven by human emotion, but you can see it
Yeah,
nice and clearly on a go no
and
go chart.
I would I've don't get me wrong. I've talked about this so many times with with you and everybody that'll listen. I love the old Edwards and McGee book,
Yeah,
right? And I love pattern analysis, and that is all supply and demand. That is, if somebody, like you said, if somebody thought it was expensive at this point, it'll be expensive at that point the next time it gets there, right? So if they're able to get out of that position, like you said,
yep,
they're going to do it unless something changes structurally or something changes that makes it now not expensive at that level. And that's when it then becomes that concept of polarity. And
yeah.
when I teach patterns in classes or to clients or whatever, a lot of people will really quickly jump and say, they'll say to me, oh, is that a head and shoulders, right? So, you get this, and then are we looking at, you get the idea, right? I'd like to take a bit more time and draw that properly, but
Sure,
people would
sure.
say, is that a head and shoulders? And I often will say it really doesn't matter what you call it, right?
Yeah.
It is the market action underneath price activity
Mhm.
dictating what you're seeing on the chart. And you can call this is a fairly textbook head and shoulders, right? In a way, you've
Mhm.
got a nicely defined neckline, you've got a left shoulder coming back to resistance, you've got the head coming lower and coming back to resistance, you've got a right shoulder coming back to resistance and then breaking above. But
Mhm.
I don't think any of that matters. You could also say, which I like to say as well, is that every head and shoulders is really just an ascending triangle, right? The right side of a head and shoulders is always going to be an ascending triangle, right? You've got a
Yeah.
high, low, and you've got this
Well,
neckline.
the right side of an inverse head and shoulders will always be an ascending triangle.
Sure.
The right
Yeah, yeah,
side
yeah.
of a head and shoulders will
The
always
right
be a
side of a
descending.
Yeah,
Yeah.
the right side of a bullish head and shoulders bottom, right?
Yeah.
A reversal on the bottom.
Yep.
But you can call it whatever you want to call it. But
Right.
the idea is more important of what you were saying, that at these price levels here, the people were taking the same action, right? They were selling, and then they were selling, and then they were selling, and now they're not.
Yep.
So something has happened, and now this level here should act according to the concept of polarity, and we will look to it going forward. If price struggles around here, will it hold as support now?
Mhm.
Um, and that's exactly what you were saying. So there's a lot to look at on the dollar chart. It's a really interesting chart.
Yeah. Alex, last chart. Anything you want to leave people with as we head into the trading day, Friday, February 5th?
That's a great question, sir. I
There's
tell you what,
thousands of them.
let's we haven't really talked cryptocurrencies today,
Yep.
and crypto Bitcoin has been interesting in the last few sessions, in this giant uptrend that we've had since
Mhm.
the go of around 10,000. We
Mhm.
had this really big consolidation,
Mhm.
correction, which again scared us a little bit with this inability to stay at zero and then the amber bars.
Yep.
But look where we are right now. We're back above zero. We got a renewed go signal on Bitcoin. So
Yep.
now that may well struggle for a bit longer, but it
Mhm.
does indicate that the general trend in Bitcoin is still in place. So I'd be looking at Bitcoin to see if it can challenge these these 41,000 highs again. And if we do pull back, as a lot of people are looking for it to pull back one more time, then what happens at the zero line?
Yep.
So
Retest that prior high. Maybe
yeah,
it pulls back again. Look to the zero line.
that's what I'm going to look at this week a little bit.
I'm going to break my own rule. I
One
got
more.
to see Ethereum. One more Ethereum.
Okay. There you go.
That. Boom.
So, and these are all anecdotal points with the go-no-go charts. Like, I like to see, and I've noticed that towards this is all stuff that that is really important because it's that nuance and it's that sort of understanding what you're looking at. I think that really helps and adds value. But when you see a sideways consolidation in whatever form, a triangle, a sideways line, whatever it is, correction, pullback, we know from the textbooks that a correction will have less volume, right? So you see how the oscillator has gone pale. That means that volume is lower than it has been in the past. The dark blue line of the oscillator means volume is heavy. So this is textbook. Consolidation sideways, less volume, and less momentum in general, right? So the oscillator going to zero is what you want. But what I'm really look for as well is a clustering now of the re-entry icons towards the end of a consolidation. You see that a lot. Like you see towards the end, 1, 2, 3, and then it'll continue. So it's almost as if people trying to get back in, trying to the momentum, sort of that first attempt, and then I like to see that when you see a sort of a clustering of trend re-entry icons towards the end of the consolidation.
Brilliant. Alex, thank you very much for taking the time this morning to walk us through just kind of how Flight Path played out this week. That's right. That's coffee in that mug, right? I'm working with some herbal mint tea.
Oh, that's very fancy.
Yeah.
I'm a straight coffee in the
am
morning.
Fancy. Contrary to popular opinion, Alex, I am fancy. Thank you again, and good luck to everybody out there in the markets. Stay tuned for launch conditions coming out on Saturday, Flight Path coming out on Monday morning, and we'll see you back here again next week.